Many forex traders does not know the value of risk and money management, right? Risk management and money management are one of the foundation of success in the forex market, because you use money to make money. So if you don't know how to manage your risk very well, and if you don't know how to manage your money very well, you might end up losing that money to the brokers. So in this video, we are going to be looking at the concept of risk management, money management. We are going to look at different forex pairs, and also we are going to look at lot size. We are going to look at how you calculate your lot size and other things that you need to understand about risk management and money management. So my advice is you watch this video from the beginning to the end and don't skip any. Money management in trading is a defensive strategy that is meant to protect your capital. It is a way to decide how many shares or lot size to trade at any given time based on your capital, that is the available capital you have. Successful money management can save you from draining your account when you hit a bad streak of losing trades. So money management will help you to protect your account and help you to save your account balance when you have so many losses. So before you start trading, you must understand your money management and your risk management so that you don't get wiped out in the market. So now let's just look at the definition of money management, right? Basically, money management in trading is a defensive strategy that is meant to preserve capital. It is a way to decide how many shares or lots to trade at a given time based on your available capital. Successful money management can save you from draining your account when you hit a bad streak of losing trades. Now, before we talk of money management, we are going to look at the forex pairs that you are going to be trading, because as a forex trader, the first thing you have to consider is the pair that you are going to trade. We have different kinds of forex pair. We have the major pairs and we have the minor, right? The major pair are 7, and these are forex pair that has the quote of the US dollar. So these are called the major pairs. So these are pairs that has the quote of the US dollars. While we also have the minor pairs. The minor pairs are the ones that does not have the US dollar quote, right? So the 7 major pairs we have here is the Euro USD, that is Euro against the US dollar. We also have the USD JPY, that is the US dollar against the Japanese yen. We also have the British pounds against the US dollars, that is GBP USD. We also have the US dollar against the Swiss franc, that is USD CHF. Then we have the Australian dollar against the US dollar, that is AUD USD. Then we have the US dollar and Canadian dollar, that is the USD CAD. Then we have the New Zealand dollar and the US dollar, that is the NZD and the USD. So these are the major forex pair. Then the minor forex pair are the ones that does not have the US quote, the USD quote, right? So we have the Euro, the Japanese, and the British pound. So this minor pair does not have the US quote. So we have the Euro GBP, we have the Euro JPY, we have the GBP JPY, we have the GBP CAD, we have the CHF JPY, we have the Euro AUD and the NZD JPY. So these are the minor pairs, right? For you to be able to trade very well, we also have the future. The future, we have gold and the US dollars, that is the SAU USD, and we have commodities, that is US oil, that is the West Texas Intermediate Crude Oil, STR-USD. So these are the examples of the pairs that you can trade in the forex market, but there are so many of them. But so this is the ones I decided to present to you, which we are going to use in this our tutorial. So now you have understood the major and the minors pairs, right? And then you now know some of the future and the commodities. So what do? You look at the ones that is pleasing to you, right? That is what you expect to look at. So when you have picked the pair that you want to trade, the next thing is to calculate the pips. How do you calculate the pips? Remember that every forex pairs, including future and commodities, they have numbers, right? That is the example of what I'm talking about. This is the numbers. If you open a chart, right, you see that the forex pairs, they have numbers. So this is how you are able to identify the pips from the numbers of that forex. So now the Euro USD has the same code with all the USD related pairs, right? That is the 7 major pairs. They have the same code. So if you want to look at the pips of the Euro USD, you are looking at the pips of other USD codes except the USD JPY, because every JPY has different codes. So the code of JPY is different from the USD code. In Euro USD we have 6 numbers: 1, 2, 3, 4, 5, 6. While in JPY we have also 6 numbers: 1, 2, 3, 4, 5, 6. So now this is how you calculate the pips, right? The last number is the 0.5 pips, or you can call it the piplets, right? Then we have the one, this one on green. This one is 1 pip. The same measurement with the JPY, 1 pip. Then we have the second one. This one is 20 pips, right? The same thing with the USD JPY, 20 pips. Then we have this one is the 300 pips. This one is 1000 pips, and this one is 10,000 pips, right? The same thing with the JPY. This one is the piplet, 0.5 pips. Then the green one is 1 pip. Then the 2 is 20 pips. Then this 3 is 300 pips. This one is 1000 pips, and this one is 10,000 pips, right? So this is how you understand how the pips work. This example of it, right? So this one is the lowest, the 0.1, known as the piplet. Then this one is the 6 pips. Then this one is 80 pips. This one is 300 pips. This one is 1000 pips, and this one is 10,000 pips. So this is how you calculate the pips. Then if you go to the gold versus US dollars, the same thing applicable to it. This 5 is the 5 piplet, that is 0.5 piplet. Then this 2 is the 2 pips. Then after this decimal point, the next one is the 10 pips. This one is 500 pips. This one is 7,000 pips. While this one is 10,000 pips. Now I hope you understand what I'm talking about here. The same thing is applicable to the crude oil, that is the US oil. The same thing is applicable there. 6 is the 6 piplet. Then 3, we have the 3 pips. Then the 4 is the 40 pips. Then we have the decimal point. Then this 8 is 800 pips, while this 7 is 7,000 pips. So the US oil has the highest number of 1,000 pips, while gold has 10,000 pips as the highest number of pips. In fact, the major pairs, they have 10,000 pips, right? So this is how you look at the pips. This is how the pips have been calculated, right? So whenever you are trading the market, you should understand this movement, right? Because these numbers will be changing as the forex market is moving, right? These numbers will be changing. So this is the number you should be looking at, understanding these calculations, right? So you will see the movement of the pips, how the pips are changing. So these are the things you need to understand if you really want to manage your money very well. Then after that, the next thing you need to understand is the lot size. Lot size is the amount of money that you are willing to stick, right, in a particular trade. The amount of money you are willing to stick in a particular trade, that is what we know as the lot size. Now we have 4 lot sizes, right? We have 4 lot sizes. We have the standard lots, we have the mini lots, we have the micro lots, and we have the nano lots. Now the standard lot is the highest lot size, right? It is equal to 100,000 currency units. It is the largest lot size, because 1 pip movement of this lot size is equal to $10, right? A movement, 1 pip movement of the standard lot is equal to $10, right? So whenever one standard lot size moves 1 pip, it is equal to $10. Then the mini lot size is equal to 10,000 currency units, and 1 pip is usually equal to $1. That is 1 pip, 1 movement of a pip in the mini lot is equal to $1. Then we have the micro lots. The micro lots in forex is equal to 1,000 currency unit, and 1 pip in the micro lot is usually equal to 10 cents. 1 pip movement in a micro lot size is equal to 10 cents. Then the lowest of it is the nano lot size. The nano lot size in forex is equal to 100 currency units, and 1 pip is usually equal to 1 cent. That is 1 pip movement in a nano lot size is equal to 1 cent. So I don't think any forex trader is making use of this nano lot size. I think the lowest that I know that traders are using is the micro lot size, which is the 0.01 lot size. That is the lowest that many forex traders are using. So the standard lot size has 1 unit, while the mini lot size has 0.1 unit. Then the micro lot size has 0.01 unit, while the nano lot size has 0.001 unit. And I say no trader is making use of the nano lot size. What traders are making use of is from the micro to the standard, and I think the micro lot size is the lowest, while the standard lot size is the highest. So you have to take time to understand how this lot size works, so that you know which one to implement. Like if you want to use the standard lot size, make sure that you have enough capital, right? Make sure you have enough capital. Just like I said, 1 pip movement is equal to $10. So if you are gaining, just 1 pip gain is $10, while 1 pip loss is $10. So you should understand this particular lot size before you implement it. While the mini lot size has $1 for 1 pip movement. So each time a forex market moves 1 pip, it amounts to $1 in the mini lot size. While the micro lot size is 1 pip equal to 10 cents. So when the market moves 1 pip, it is equal to 10 cents. So that is where money management comes in. So if you have enough capital, like you have maybe $50,000, $100,000, $200,000, $500,000 in your trading account, you can make use of the standard lot size. But if you have smaller capital, like $3,000, $5,000, $6,000, you can make use of the mini lot size. But if you have the smallest capital, like the $500, $400, or even $1,000. Then you can make use of the micro lot size. So it's very important that you understand this. So you look at your trading account, your capital, know how much you have in your capital. Then that is when you know the type of lot size you are going to implement. Don't go and implement one standard lot size when you have only $1,000. That is in form of taking too much risk, right? So it is very advisable that you look at the lot size and implement it with your capital, the amount of money you have in your trading account, so that you don't go and waste your money. Because in forex trading, you use money to make money. So that is why it's very important that you take our time to understand lot sizes, right? So that you know the one that is peculiar to you. Don't go and use bigger lot size when you have small capital. So that is it for lot size. Then there's another thing again you need to understand. We have the spread, the commission, and the swap. So in forex trading, a spread is the difference between a forex broker's sell rate and buy rate when exchanging or trading currencies. Spreads can be narrower or wider depending on the currency involved, the time of the day a trade is initiated, and economic condition. Remember that whenever you place a trade, you go into loss, right? You enter into loss before you can enter into winning. That loss is the spread, right? Spread is what the brokers use to gain some profit, right, in the market. So that is why whenever you place your trade, you will be in losses first before you can now graduate to winning streak. So that is what I mean by spread. That is why if you open a chart, you see two lines, right? Two lines. Whenever you place a trade, right, you enter into losses, right? You start seeing red before it will graduate to blue. So that is what I mean by spread. Some brokers can spread their peers very wide. So that is why before you start making use of a particular forex pair, you have to look at the spread, look at it and know the wideness of that spread. If the spread is too wide, then you have to ignore it, because sometimes economic conditions, or it depends on the day that you initiate that forex trade, it may have wider spread. So spread is very important, right? So whenever you want to place a trade, you should look at the pair and look at the spread, right? If the spread is too wide, ignore it. But if the spread is small, it's narrow, you can implement it. So that is what I said. You have to understand the spread of a forex pair before you implement it. Then commission refers to the service charge that brokers require for carrying out transaction on behalf of their client. This fee is typically based on the size and type of transaction. Commissions serve as compensation for broker for the time and effort spent facilitating the trade. So commission is like a fee that you pay to brokers, right? But I don't think it's every brokers that give us that require for commission. Some brokers doesn't, but commission is like a fee you pay to brokers for their work in implementing your trade and other things, managing your trade and other things. So that is the work of commission, right? You open a trade, a pair, you look at the commission rate, know how much you are paying in commission, right? So you don't go and pay more than what you are aiming to gain, right? And the pairs, the commission for each pairs differs, right? They differ, they are not the same. Some pairs have higher commission than the others, so you should look at the one that has lower commission so that you don't pay too much to the brokers. But it is not all brokers that implement commission. Some brokers does not have commission, you just place a trade and that is it, right? Then we have the swap. A swap in forex refers to the interest that you either earn or pay for a trade that you keep open overnight. There are two types of swap. Swap long, used for keeping long position open overnight, and swap short, used for keeping short position open overnight. So swap is like a fee that you pay for allowing your trade to pass through the night. So if you open a trade and that trade passed through the night, you are expected to pay a swap fee, right? And this swap fee are They are expensive, right? So this is a fee that you pay for allowing your trade to cross the next day. And I think that the people that are facing this issue are the swing traders and the position traders, because day traders do not face this issue. They close their trade before the end of the day. So it is swing traders and position traders that usually pays this swap fee, because you are holding onto your trade for a long time. Like if maybe a market is in a trend, right, and you want to hold that trend for a consecutive number of days, then you have to pay for the days that you are holding this trade, right? Each night that passes, you pay a swap fee for that trade that you are holding. So that is why you have to understand all these things before you implement your forex trading. This is very, very important, so you have to take note of it. So like, let me make a rewind back to what we have discussed, right? First, before you start trading, you have to look at the forex pair that you are trading, understand the forex pair you are trading. If you are trading Euro USD or you are trading gold, you have to understand it very well. Then the next thing is you have to look at the pips, know how to calculate the pips, which I have discussed here with you. Know how to calculate the pips. Like I said, the Euro USD has the same calculation of pips with other USD quotes except the JPY. The JPY has a different calculation, right? If the Euro USD has 1.13215, then the USD JPY will have 113.215. So you can see that they are different. The decimal point with the Euro USD and other USD pair is different from the JPY pair. So the Euro USD, that is the major currency, has the same calculation except the JPY. So after that, you also understand lot sizes, and then know the type of one that you want to implement. Like I said, we have the standard lot size, we have the mini lot size, we have the micro lot size, and we have the nano lot size. Standard lot size being the highest, right? Why micro lot size being the lowest, right? Because micro lot size is the lowest that rated traders are using, because I've not seen any trader that is making use of the nano lot size. That one is too poor, so no trader is making use of it. For me, I think the lowest for now is the micro lot size, while the highest is the standard lot size. Now the standard lot size, we also have 10 points, right? So 10 point is also part of the standard lot size. 1 point is the minimum. Then we have 10 points, we have 100 points, we have 50 points, we have 1000 points. So it depends on your capital. You don't just place lot size without checking your capital. That's why I said you must look at your capital before you place lot size. Some traders are making use of 100 standard lot size. So any trader that places 100 standard lot size, that trader has at least $1 million in his or her trading account. And any trader that places 50 lot size, standard lot size, has at least $500,000 in his or her trading account. So if you don't have this amount of money, don't go and place lot size blindly. Place the lot size that equals to your capital, so that you can be able to trade with confidence, right? Because trading is money make money. You are using money to make more money. And so, like I advise, you have to use only either 1% or 2% of your entire capital to execute a particular trade. Either 1% or 2% of your entire capital. That is what you are expected to use while implementing your trade. So ladies and gentlemen, I believe you have learned a lot from this money management strategy. Please, I want to know your thoughts and your opinion in the comment box. If you love this video, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to subscribe to this channel. Turn on the notification icon to be the first to be notified whenever I publish new content. And also don't forget to come back for more updates. I will see you again in my next update. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. I will see you again in my next update. Bye.